Hi, everyone. My name is Evan. I'm the accounting supervisor here at Mitchell Consulting. And as part of our Empower, Thrive, and Scale program, we've been hosting monthly Q&As for people that are involved in our network and are new to business, trying to scale their business, etc. Um, we take questions in advance. So if you're in the ETS program, through that dashboard, you can find a place to submit them. Or if you just come to the live Q&As, when there's time after we get through the pre-submitted ones, we can handle questions in real time. Uh, Even if you have specific questions specific to your business, we're happy to help you navigate those situations and give you our insight. When you're paying someone as a contractor, you're just paying them directly. It's not like having someone on payroll where there are payroll taxes taken out and it's reported to the IRS and all of that. Contractors are basically folks that are doing things for you on their own time and because of their unique expertise. So it's you outsourcing something that you need to someone that specializes in it. A W-9 form, what that does is that collects taxpayer information for the person that you are paying. So that should have their name, the name of their business, either their business's EIN or their social security number if the business doesn't have one. Um, that's something that we recommend should be like collected from a contractor before any payment is sent out to them. Um, Not every single vendor that you pay requires that. This is just for independent contractors. So if you go and spend a lot of money at like a Lowe's or something like that, that's a corporation. You don't have to worry about sending them receiving a W-9 or sending them a 1099. This is specifically to individuals that are running like small businesses or businesses where it's often just that person. Um, so I guess for more context, a 1099 is what you send to contractors that you've paid over $600 over the course of the year. That's the form you send around tax season that basically has the totality of everything you've paid. And the reasoning behind that is, like I said before, the wages you've paid them have not been taxed or anything like that. It was just a direct payment. So what the 1099 does is basically the business owner that is paying a contractor, is going to write off all of the expenses to contractors because that's a business expense and that can offset your income. Um, but then you need to submit the 1099 that has that contractor's taxpayer information so that they can then recognize it on their end as revenue and then they'll be taxed accordingly. Um, so yeah, the W-9, basically what that does is that gives us their taxpayer information so we know we have it. When it comes time to prep the 1099, we'll know where to send it, what their taxpayer ID is and everything. And then the 1099 is the culmination of everything that we've paid them. The rule is once you've paid somebody over $600 for the course of the year, that's when you're legally required to send out a 1099. So what I said before is we collect W-9s for pretty much any contractor we're working with. Sometimes they might not even cross that threshold of $600, but it's much easier to get that done up front than to try to be like feverishly going through your books around tax season to figure out who you've paid $600, whose information you need, who you need to send a 1099 to. And it's worth saying too that folks that are working as contractors should be aware of this. So it's not like you're asking for anything complex. They should have an up-to-date W-9 that they're ready to send. In the same way that it should be your best practice to be collecting that from them, they should have it's best practice for them to have that ready to send out. And the answer is it depends on the situation. So let's say you have a team of people and you're running payroll bi-weekly, you're paying them. Yes, those paychecks count as expenses. That is you paying someone on your team to conduct business. So, it's a legal business expense that you can deduct when you're filing your tax at the end of the year. Um, I guess when I say that it depends on the situation, what I'm getting at is that this question is frequently asked by business owners that sometimes don't even have a team yet. And so instead of actually taking a paycheck through payroll, they're just taking draws from their business because as a single person LLC, uh, you're going to be filing a Schedule C at the end of the year, which is basically uh, it's more or less the business's return is just going to be living on your personal tax return. So there's not much of a distinction between your personal finances and the business's finances. So in that situation, when you're paying yourself, that doesn't count as an expense. Since your money and the business's money are seen as one and the same, you just have to record those things as draws. And the overall income of the business is going to be what sits on your personal tax return that you're going to be taxed on. So draws like direct payments, ACH transfers, checks that you may have written yourself, those all do need to be recorded because that's just best practice for your business so that you can understand what you've invested, what you've taken out, and have a good idea of where your equity stands. But you can't deduct that as a business expense. However, like I said, if you are paying your team and they're on payroll, that is a qualified business expense, and you can deduct that to offset your income to reduce your taxable liability. I think it's probably worth talking about in we do client roundtables every month, and one specific topic that we've covered is when do I make that switch from just taking draws to structuring my business as more of a corporation, putting myself on payroll, and doing a more formalized payroll process. So we'll talk more about that in a different meeting. Well, this is kind of a two-part answer. I'm an accountant and not a marketer, as you may have guessed. So I think the first place to start is maybe having someone that has more of a marketing background or at least a strong hold on whatever industry you're operating in. And you can do basic research yourself. I just think it's, always helpful to have a professional's eyes on it. Um, Look into metrics that people in your industry are typically tracking. What are like some pain points that people report consistently? What's going well for that industry? What is historically something that's like very hard to deal with? You're going to do a lot of research and see how most businesses that are similar to yours operate. And then what you can do from the accounting side is start to structure how your books are set up so that it makes it easier for you to take a look at your finances versus like an average company in your industry's finances. A lot of people, when they start their books, it's very generic and they're just recording things. Like there's just not a level of detail on the reports that comes up. So sure, you might have a total amount of expenses, but what's the breakdown of the expenses for a quarter, for a month, or for a year? Um, it's obviously helpful to have the total amount of money out, but you need to have detail on where that money is going and what it's going to. So what we typically advise people to do is, yeah, just maybe oftentimes if you started a business, you have a network of like-minded folks, people in the same industry, or you're tapped into some kind of network where you can get like a keener view of industry standards, and then you can come to your accountant and say, "Hey, here's some things that I think are important for me to track. I'm not getting that from my reports. Could you structure my chart of accounts so that they are more standardized to my industry?" And then it can become easier for you to sort of look at specific metrics and see really what you should be keeping track of on like a monthly or quarterly basis that you can start to improve upon. I might be biased as an accountant, but ASAP is my answer. Um, though I do understand that when you're just starting off, cash flow might be tight and you're trying to keep a lot of things in house just so you can sort of get the ball rolling. I would say that maybe the most important time to start using a professional bookkeeper is when you're starting to think about scaling up, just because sure you might be able to keep record, like I was saying in the previous question of like total money in and out. You might have an idea of the amount of revenue that you've generated, but if you're scaling, you really need to start making more informed decisions of where am I spending my money? Am I getting appropriate returns from how I'm spending my money? And the best way to have accurate financials that give you useful information is to have a professional preparing them. So, like I was saying before, at a point you might be doing it in house to sort of save some money, but what I would say in response to that is chances are you probably aren't an accountant or like a finance savvy person. So yeah, it might cost money to have someone be handling that for you, but think about the time that it frees up if you're not going to be having to do the bookkeeping yourself. You're going to hire someone that can do it more efficiently, can do it better, and give you a stronger end product that can help you make smarter, more strategic decisions. Um, so I would like, I said ASAP, but really when you're starting to think about scaling, take some time to think about what factors are weighing on you when you're thinking about scaling. And if you can't easily define those, that's a red flag that you should have a professional bookkeeper come in and help create your finances in a way that give you meaning so that they're not just, because we work with a lot of folks that have come in and sure they might be looking at their P&L every month, but one, they don't really know if it's been reconciled properly or verified if the information is correct. And even if it was correct, oftentimes it's filtering into their reports in a way that's not very useful. The main way to avoid them, I guess let's give a broad answer. I'm going to say consistency. We're proponents of setting aside time every week or every other week to basically do all of your financial tasks at once. And that's relevant if it's relevant if you have a third party bookkeeper, but especially if you're doing it yourself, it's very easy for that to kind of keep getting pushed into the future. And then suddenly you have to, recreate 3 months of your finances. Consistency is a big thing. Try to give yourself time on a weekly, bi-weekly, or at least monthly basis to be popping in, making sure your bookkeeping is done, making sure all your bills are paid, all of those things, and then also making sure that you're reconciling your books. That's really the big thing. When people start handling their own finances, I don't know, it's kind of a like it's a touchy subject. So I see folks being afraid that they're going to create like a huge catastrophic mess, or under the impression that once they make something in their accounting software, it's there for good. It's important to remember that everything you're entering into your accounting software is just recreating a record of what's already happened. The reconciliation process happens monthly, and that's you basically going through your books and comparing them to your bank statements to make sure all the transactions you've made actually occurred and they're all listed in the correct amounts and are split out to the correct categories. Um, the biggest issues I've seen for folks is if they're not consistently handling their books, then they're skipping reconciliations, and oftentimes they're doubling expenses or they're missing some of them, they're misrecording revenue. Um, and without reconciliations, there's no way to verify if your financial statements are correct. So while it might feel accurate, if there's no like hard data behind it to back it up, we can't, that doesn't really give us any useful information. So just making sure that you're consistent with it and understand that, yeah, you're just recreating records of what's happened. So if you do make a mistake, it's much easier to handle it once it's found, or I mean, really as close to as soon as it was made. Um, but if you're not popping into your finances and keeping a tight rein on them, what could have been a 5 or 10 minute fix if you catch it the week of could very easily turn into like a multiple hour fix if you're trying to figure out, where $50 is from 6 months ago. Um, we'd have we've had live like I mentioned before, we do these like live Q&As. We've even had sessions where we've had folks come in and we just kind of go through their books with them and go through how to create individual transactions in QuickBooks. Um, so just know that there's support there to help you do it correctly. But if you do it incorrectly, it's important that you catch it sooner rather than later. And again, I can't harp enough on how important the reconciliation process is. So just making sure that you have reliable data flowing into your reports to make business decisions is, I think, the number one way to avoid any large like bookkeeping or finance mistakes. Um, and that's all that we have for now for frequently asked questions. Please keep submitting them if you have them. Please attend our Q&As we have monthly, also our client roundtables monthly. The roundtables are a little bit more like community focused, where we can just have sort of an open floor conversation about, we have a topic each month. Oftentimes we get through that and then we end up sort of rolling that into conversations of how that topic looks applied in the real world and what folks are struggling with, what their wins are. It's just nice to have sort of like an open floor of like we're all doing different businesses, but working on a common goal of like taking something that they're good at and they like doing and making it a business and a lifestyle for them. So we'd love to have you there. And thanks for watching this. Again, I'm Evan, and I hope I see you soon. Have a good day.